market breakdown. If you are confused, I'm here to give you more clarity on how to trade smarter into this new trading week. So let's get right into it. So as you can see, looking at gold, we can see how on the previous week, right? We can see how if we look at this week right here, we can see how price never got above this high right here. Now on the open of the new week, we did open and push above here already, all right? But we can still see how price is constantly rejecting on top constantly like this. So it's gonna be kind of interesting to see how this week can go. Even though we did overall close above the um, previous week open, which shows signs that we are in a nice slow up momentum. It just shows that the trend is kind of weak. So we are overbought on a weekly time frame. So uh, do I have any kind of like clear direction? What we can see here that we're kind of bullish still for this week, but we can see how the momentum is slowing down. So let's go to the daily time frame and see what's going on. Get more deeper insight. All right, so we can see here that on the previous day that we did close bullish, right? But as you can see, we was beneath this resistance area where price, broke down within this range last time when price kind of broke down. So you can kind of see how we had like this nice double bottom. Price still has not, broken above this yet. So we're still waiting for. I mean, it don't open above here now, but it doesn't mean it's a strong close. So, but overall, I'm gonna say we're still bullish on gold still because we're still above the 50-day moving average or 50 week moving average. What is the 50 day? I think it's a 50-day moving average. I don't know, but yeah. Point is we're above this 50-day moving average, right? So right here, just give me a clear sign that okay, we're still overall bullish no matter what. So this actually was like a discount, like I told y'all. Along with above 5,000, then we can still continue to see price push up. So overall, I would say I'm still bullish on gold, right? Um, for this week, but I would still kind of be cautious as price continue to push up, because at any moment it can still drop back down. So, but right now we're still bullish, and you probably wonder, okay, how we know signs that okay, hey, price is weakening? Well, by looking at the 4 hour, the daily time frame. Like for example, like let's say if this day end up closing, bearish, then guess what? That's a clear sign. Okay, maybe the next day we can end up closing. So it just really depends on how the candle close and how strong it close. So this day right here is gonna be very important to see. Okay, hey, look, if it closed strong, then that can be a clear indication that we can continue to see price push. Cause it did give us a nice little push up, and then now we're above here. So, and the ultimate goal was to see price break above, retest, which we own right now, and to see it continue to go higher. So overall, I'm definitely bullish on gold. Let's see how the 4 hours going. So the 4 hours like mainly like my entry point. So the 4 hour is even going strong too. So you can see here on the 4 hour that we got a nice strong momentum. As you can see, we broke back above here. Very choppy at first, but you can see overall we kind of still remain above here. So that means we still overall bullish, and we're above here in the 4 hour too. So we still overall bullish. So definitely, I'm looking to continue to see price go continue to push up. Um, and then if we go to yields are very important to pay attention to because as you can see, yields has been pushing very down hard last week. How did we close last week? We can see on yields, the yields closed very bearish for last week. Now this is a bullish CRT setup. So for those who don't know what a bullish CRT setup is after a huge momentum has pushed down the previous week, right, or previous day, right. The next day you have a candle that closed bullish within that candle range. So typically what you expect for price to retrace down tag a little bit, and then you kind of want to see price push up, taking out either the opening or the high of that previous range, right? So this is a bullish CRT setup, but we are still, and you can see how we kind of in this transition phase too. So this is like a kind of like a warning sign. Okay, hey, look, that price can definitely um, go back up. So but overall, we still kind of bearish, so we're still like right underneath this range right here. So alone, we kind of respect this resistance level that we at right now, which is this zone right here. Alone, we kind of stay within this range right here on yields, because like I said, original yields is very important to pay attention to, because if yields is constantly pushing down, then that actually support gold to continue to go up higher. So but if it do start showing signs that want to push up, then that can either slow down gold or cause gold to drop back down. So it is a bullish CRT setup, so you kind of want to be watchful. That's why I say like with gold already slowing down, be choppy. kind of want to be watchful. So we just see right now. So this is considered a transition phase right here. So we're in this transition phase. So we just gotta see. Okay, is it gonna follow through on pushing through? And if it don't, then you kind of want to see it break back below here and continue going back down. So and that can kind of help determine, gold more better too. And then you got DXY. So DXY is very important to look at too as well. So you can see on the previous week, we did close bullish. Let's go to the weekly time frame. So you can see here that we did close bullish, but this kind of brings back to where we at overall of the overall picture of what US dollar is doing. So if we kind of look right, we can see here that on the US dollar, we can see how price is still in this transition phase. It didn't really do exactly how it was supposed to do. We end up pushing back down. But this is why I say when price is in a transition phase, it can do multiple things with two things only. It can either reverse and go up higher or manipulate and then continue to go back down in this direction. So right now we're still in that range. Even though price is kind of choppy, we're still in that range right here. If you look like at the overall picture, if I draw this out right here, and you can see here that this is still technically bearish. No matter what, it's just making a bunch of noise right now. So if you kind of line that up to with this, then ultimately that's just price right now underneath here. So this still operate as a resistance for this to continue to push down lower. So that's kind of what my expectation is from this. Even though we did close bullish, the thing is, so when you're combining CRT setup, so I can take this right here and put it right here for the week. So when you're combining, obviously when I drew this out, this was part of that transition phase. So we kind of see if price want to continue to push down or push up. If it would have broke above here, then this would have broke above here, then this would have been a clear indication, right, that we can be seeing US dollar push back up higher, right? So, but it's not doing that. It's staying below here. As long as it's staying below here, these are all signs that we could be going down deeper. Especially with Trump, whole goal is to try to make the U.S. dollar cheaper, because he believed that if the U.S. dollar is cheaper, which is not wrong, if the U.S. dollar is cheaper, then you can do a lot more with a cheaper dollar, so and then you got yen that's actually trying to do the opposite. They're trying to strengthen their dollar. So it'll be interesting. Oh, dang, this kind of triggered. So it's going to be interesting on how this goes. So, but yeah, so when using CRT, I try off a CRT perspective. CRT is understanding the timing of candles and the behavior pattern of candles and how to trade with, candles, right? But that don't mean nothing if you don't understand how to trade that with structure. So you gotta combine both of them. So with price, all right, even though we did close bullish, usually when you close bullish on the previous week, usually you expect price to retrace down like how it's doing now and then continue to go up higher. So because we underneath this resistance, now if it did happen to break above here, then yeah, that'd be a clear sign to see price push up. But since we're underneath here, right, then we can still see price, push down. Now it has been a key support level, so you can see how price has been constantly pushing below here. So right now, I'm still on the bearish side of things right now of US dollar until it showed me signs that want to break above this resistance right here. So if it can't do that, then we can be seeing price continue going down with this overall structure flow. So as you can see here, so something just got added. I need to delete this because this old news. Oh, hold on. Hold on. Now I gotta delete this. Yeah, I don't like my stuff looking like messy on every time frame. So I try to keep when I do my top-down analysis, I try to keep everything kind of clean and organized so I know what I'm looking at because it's easy. So as you can see, that same concept. So it goes back to what I was saying. If price was to break above here, so you see a nice double bottom and it's pushing up here. If price was to break above here, like I was saying, based off the weekly time frame, then we could be seeing price start go back up. But right now we're still underneath here, which means price could still continue to push down lower. So that's what I'm kind of looking at. So right now, and you can see here that we actually closed bearish on the previous day. So I'm actually still kind of bearish. I'm still bearish on things. The only way how I would shift to like bullish if this situation happened right here. If it breaks above, retest, and then continue going higher. That's the only way how I would kind of like shift to see price kind of start pushing back up. And then once it break above here, back above our overall zone, then yeah, that'd be a clear indication. So, but right now, yeah, we definitely still bearish. So I'm gonna stop right there. So with that being said, if I'm bearish so far on DXY, right, then what that means for stuff like UJ, that means I'm expecting for UJ to be a bearish week. For stuff like unless things change, obviously stuff change as I if I see that the structure is changing. But for right now, this is for what it is for right now. So the whole idea is when you're doing a top-down analysis, you don't want to get in the habit of switching your bias back and forth. The only time you would switch your ideal bias is if your higher time frame change. You don't switch your bias because the lower time frame is doing something totally different. At the end of the day, your higher time frame is your future, your lower time frame is your present. So you kind of want to focus on a higher time frame. So as long as the weekly and daily are still showing align with each other, then that's what I'm gonna go with. So right now, the weekly and daily is still showing that we're in a bearish momentum. But if the let's say in another thing how it gotta change, it has to close above. So like for this week, I will be strictly bearish. Now we end up closing bullish in the overall week, close bullish above here, then yeah, then that shift my bias for next week to change. But you don't want to just constantly keep changing it because you see uh, price action is constantly moving in lower time frames. So you want to stay in line. Like I say, until the daily and weekly change, then that's how it goes. So no matter what the 4 hour do, long as daily and weekly is saying something, then that's what I'm going with, So, and let's say if the daily and weekly don't line up, then at that point I just kind of wait, because that's how I determine my direction bias. So I'm bearish with that being said. So going to UJ, we can see how we kind of bring this up. We did close bullish right here, right? But like I said, it goes back to understanding structure. So like I said, so even if we look at UJ, right? We can see on UJ we can see how price overall closed bullish previous week. Usually you expect price to open, retrace down, and push back up higher. That's typically what you expect to happen. The price to retrace down, because this is also a clear bullish CRT setup that this can really retrace down and go back up higher. If I did go for that ideal set to buy, then I'll be looking to see the daily time frame, like I said, break above that level. And if it did, then at that point, somewhere around here, I should be seeing a clear shift in structure around this range and seeing price start going back up. And at that point, then yeah, I would aim for to take out the open or the high. But other than that, just based off of structure, it can still push down. So it need to show me if this is gonna work. It need to show me some kind of sign that we could be seeing price push up, back up, some kind of breaking structure. You know what I'm saying? That we can push back up higher. So other than that, I hope that gave y'all more clarity on how to trade. We look at S&P too for those who trade S&P. So, but the reason why I always look at gold and DXY first, because like I said, gold can tell you a lot. If gold is constantly going up strong, that means there's a lot of tension going on. Because gold only goes up like crazy when there's tension going on, when people are looking to put their money into safe places. So that can tell you, okay, hey, how the economy is going. Like, there's other ways too, looking at VIX and everything too. And then you have like DXY. You look at DXY. So for those who trade stuff like Forex, so I kind of I can't I'm not about to go over every single pair in a video unless someone comment and let me know, okay, hey, look, can you go over this specific pair for me? Then yeah, I'll do that for y'all. But other than that, if you're not letting me know, then I'm gonna just strictly just continue to go over gold and DXY because, like I said, DXY. If you know what that's doing, then you can know what other Forex pairs are doing, pretty much. You know, but we can look at S&P as well too. Just kind of give a little update on S&P on how I expect S&P for those who trade S&P. So the reason why S&P is important to look at because even for those who trade stocks, if you trade stocks, right, you understand that S&P 500 is a leading indicator for all other stock pairs. I don't look at Nasdaq. Well, I do trade Nasdaq, but I don't pay attention to it only because I'm not about to mark Nasdaq and S&P when they both move the same way. It just Nasdaq's more volatile, but they literally have the exact same structure. It just Nasdaq more volatile. So if we look at S&P 500, we can see how, like I told y'all. So right now, I feel like we kind of like low key in the transition phase, which is why I made a video about this already, but I go ahead and add into this again. But we can see how we're in this transition phase right now, right on the weekly time frame. So we can see right now prices beneath here. Once we get a nice break below here, then yeah, that could be a clear, sign that we could be seeing price, drop if S&P is to start dropping. But right now, we're still in a nice, strong trend. Compared to what it was, is it slowing down? Heck yeah, it's slowing down. Because down here, we had that first dip. then price, you can see how price was going up, and then you see how it's slowly starting to curve a little bit, slowing down. So you can tell the trend is definitely weakening. So that's why I say if we get a nice break below here, then that'd be a nice sign, clear sign to see it drop. But we did close bullish the previous week. I can't say that. So was being in the uptrend, price closing bullish the previous week, and it closed strong too. What that means is if price is to go up, price should be able to open, retrace how it's doing right now, and then from this point, it should be able to respect this, right? Somewhere around this zone, even if it comes to here, it shouldn't go no lower than this opening of this candle. It already retraced how deep this retracement is so far from the opening. So this retracement is already at 0.61%. So yeah, that's about right. So we already at the lowest point where it can go to. You know what I'm saying? If it is to go a little bit lower, maybe 1% at max, 1% would be right here. So yeah, at the opening, 1% would be here. So it shouldn't go no deeper in this. And we're looking for this to retrace down and then make a clear breaking structure on a lower time frame and go back up. That's how you kind of would expect that, but I wouldn't expect too much because around this range, you see how you got a lot of rejections around here. So around this range, you can tell like price definitely made a lot of retracement, So if we break it down to the daily time frame, you can see more of that price slowing down. So you can see how we're getting closer and closer to our 50-day moving average. So that's another clear sign. So you can see how price is the trend is slowly weakening. So you can see how like once you make a clear break below here, then yeah, that's a sign that we can be seeing price start dropping lower. So it's definitely so far shifting down, you know what I'm saying? So I'll kind of be cautious on the buys. If you are looking for any kind of buy opportunity, we did close bullish the previous day, then you need to be seeing like how price retrace right now. So price retrace right now at this moment. So if you go to the 4 hour, if you are to buy, right, at some point you want to see price make a clear. You can see how choppy this is. This is very choppy, but at some point you want to see price make a clear breaking structure, But right now it's just choppy. So you kind of can't trade this. You can see how it's just in a nice choppy range. You know what I'm saying? So you can trade this, but you kind of want to be cautious. But like at any moment, like I said, if it do go deeper, maybe they're here. But at any moment, you kind of want to see that clear breaking structure on the 4 hour or even the hour. Now that we at like 60% of a 0.60% of a retracement, we want to see price, make some type of, at least show some kind of positive reaction that it wants to go up. Maybe this can close bearish and then the next candle close bullish. Then at that point you can look to buy and then kind of attack, like go back for like the opening. I wouldn't go for anything like crazy. I wouldn't like try and target the high of this or even higher because you don't know if it's planning on going back above here. It can drop back down, especially with all these these signs that it's showing signs that it want to drop. So like I said, I would definitely be cautious. You know what I'm saying? I wouldn't be. I'd just be kind of watching. You know what I'm saying? So unless you see a clear breaking structure like on the hour, I'm talking about clear as day. Like if you go to the hour, you're gonna want to see like a clear breaking structure, like some type of you want to see something like this. And then that'd be it for what I'm looking at. But you want to see something like this. You want to see price kind of like how it is right now, where it's at. Kind of want to see price do something like this. Either this right here. These are the three transitions. So when I say breaking structure, you want to see it go to some kind of transition phase. You want to see something like this, or you want to see something like this. I'm gonna give you the three different types. It's already kind of choppy, so at some point it should be able to do what it got to do. Or you want to see something like this. Price come down, come up. Maybe do something like this, and then do this right here, and then you want to see this right here. So you just want to see something, So right now it's already in a choppy phase, so it's already kind of choppy, right? And it didn't really even break out of that, you know what I'm saying? But you want to see one of these two ideal type transition phase, and then from there, then yeah, you can take a chance on it. But like I said, even if you did take a chance on it, I would target about around right here. I wouldn't go no higher than that. I would target around here. Only because of it's already showing signs and just how choppy it is. So, and as far as for the bearish momentum, if we're looking to sell SPY, if SPY is planning on dropping, because it's showing signs, it's just not there yet. But if it is, then yeah, you want to see price break way below here. So y'all see how when I do my top down analysis, everything lines up to what I'm talking about. Like the present still line up with the future. You know what I'm saying? So what I'm expecting. So all I'm doing, your future. Think about it. Your higher time frame is your future. The lower time frame is your present. So whenever you have an expectation of what the future is showing, you just wait for the present to line up with it. So in this case, if you're still bullish and you want to buy, you need to wait for the present to do something like this. If you're a person, okay, hey, I believe S&P can drop down hard. I think we can be going down to a crash eventually at some point. Okay, then yeah, once price break below here, then yeah, and it close below here, all means go for the sales. Now everything lines up for that. So it's just really being patient and waiting for that, you know. So that's why I don't see how people can trade every single day. Like it take time for a good setup unless you're a scalper. And I don't really know too many scalpers who are successful at trading, consistent. I'm just be honest. If it's anything, I know a bunch of people who do swing trades, so that's why I switch to swing trades. And I feel like for y'all people who work 9 to 5, like I work 9 to 5 still. So for people who work 9 to 5, I think it's best for you to swing trade anyway because the pressure of trying to day trade at work, you know what I'm saying, trying to make sure the boss don't see you trading and stuff, like you can't really focus on it. You know what I'm saying? So I like swing trading because it's a perfect balance of I ain't gotta I'm not trading too much. I'm picking high quality setups, and um, I'm just not over trading. You know what I'm saying? I ain't gotta always look at the screen all the time. So but yeah, that's my market breakdown for this week. I hope this gave y'all kind of more clarity. This kind of video was kind of long, but I hope this gave you more clarity on what to kind of how to trade for next week. But to give you a heads up, I'm not a financial advisor. I just give ideas based on how I see the market. You know what I'm saying? It's still up to you to do your own homework and what you expect. But as always, the goal is not trying to catch these home run wins or try to avoid losses. The goal is to survive long enough to win. And if you can do that, you can be profitable. So see you in the next market breakdown. Peace.